Good morning, all, and welcome to today's video. I hope you had a great weekend. I hope you are ready for this week ahead. So, I have two pairs on watch today, and those are EuroCAD and West Texas Oil. So, let's break down my favorite of the bunch, which is EuroCAD. So, on the higher time frames, building the picture from the higher time frames down, the narrative as I see it is we have this low here. Okay, we tapped into this low. There was a sharp exchange of liquidity. Price moved down very sharply. It moved up very sharply. That gives me a clue that there's potentially a lot of liquidity here. A lot of orders were placed here by definition in a very short period of time, which caused the sharp move down and the sharp move up. Okay, we move down to this area and we tap into it. Price tries to move away, but typically speaking, as we know on the higher time frames, if we're going to move to the upside, we usually break below. So we do break below. We trap these people who bought here. We trap them into the buy too early. Price comes down, washes them out. The bigger players just see this when it breaks below as a bargain area of value for a buy. Okay, they're not seeing it as resistance just because it's broken below. There are instances where we would look at this as representing a high area of value for a sell, but that would typically look more like a correction like that, okay? Something underneath, and then we can say, oh, okay, these now represent high areas of value for a sell, okay? So if you wanted to call that resistance, you could, but if price just dips below, think about it logically, think about it like a business. We're taught within the Falcon community that if you treat trading like a business, it will pay you like one. Well, business people, when something is slightly cheaper than it is historically been, that to them represents a bargain price for a buy. And of course, we move to the upside. So I'm just seeing this on the higher degree as a potential impulse correction continuation to push higher, because we don't need to come all the way down to here at this moment in time, because we've already washed out all of the liquidity. And if you look very closely as well, just noticing this now, is that we also have the same psychology, is that we have this low here. There was a sharp exchange of liquidity here, just focusing more on this one. But even so, if you wanted to look at this as the area of value, we come down. What happens? We near miss to it. Okay, we get close to it, but we don't tap into it. Then we come back down. We tap into that and wash out the low that we near missed to and move to the upside. That's also indicative of the psychological patterns which we typically see. And if we measured this impulse here, and we assume that this was an impulse correction continuation to push higher, to take out this high here, which this high near missed to, okay, if we just measure that, that would take us up to about there, okay, where we would have the same pattern again. We would have the high, the near miss to the high, and then the break above, and then potentially we would have this, okay, and then we would have that 1, 2, 3 wave middle section as well, and then potentially we could be, who knows, coming all the way back down to here. But it's the same psychology over and over again, okay? So then I'm zooming in to this piece of structure here. EuroCAD is a good example, or certainly in recent times, has been a very good example of the psychology of the market and how we trade. So there's no need for us to come all the way back down to here, but we could be looking for moves within this range in the meantime. Okay, so now I'm analyzing the market structure on the lower time frames. We have the same thing here. We have a low, we come down, we near miss to the low. The FOMO channel starts, people buying here, whilst the orders that are still here drag price down, and the orders that are being placed in that area drag price down. We come in, we tap below, bargain area of value for a buy. We move to the upside, okay? Then what happens? So there's no need for us to come all the way down to here at the moment, because we've washed out all of the liquidity. What do we have? We have a near miss to this high here. So price moves up, it taps above here, and it leaves a gap to this high. Okay, so we have the second touch, first touch, okay, and potentially a third touch eventually to break above here. Okay, and then we would have that kind of structure that will become relevant in a minute. Okay, but at the moment you can see that we've tapped above here, we've washed out all of the liquidity, and we're in that run of momentum to the downside. So we have the impulse correction continuation to potentially take us down to here, where you can see even on the weekly chart there was a correction, okay, which caused a big run off to the upside. Okay, so this could be a potential short-term move down to that area, because if we measure that, that would take us down to there. Okay, and if we measured it on the break, we could be heading all the way down to here. But if we measured it to here, that would take us down to here, and then potentially we could reverse from there, and then we see that 1, 2, 3 structure. Okay, and then this is just a middle section within the structure. Okay, so that's just the thinking as I see it. Of course, the more probables you include in your analysis, the less likely it is for all of them to play out. If you think of like probabilities, if you were at school, if you remember, if you flip a coin, it has a 50% chance of being heads. If you flip a coin twice, the chances of both of the coins being heads is 25%. So the more things you try to predict, eventually the odds lessen. But that's the narrative as I see it. Okay, so now you can see this has been a bit corrective. So this requires a bit of pattern separation. But you can see that we've had an impulse here followed by correction. We corrected below the low. Okay, so this didn't at this moment in time, this didn't represent a bargain area of value for a buy, because we tapped below and price didn't tap back up. It's corrected below or through the low, suggesting that there was not enough liquidity here to send price to the upside to potentially take out this high, which this high near miss 2. Okay, so then what I'm doing to confirm that thesis is I'm pattern separating. So when we see corrections within into corrections, I'm separating the structures. Okay, so you can see, just to do that, okay, we have this high here that these highs keep near missing 2, and then we have a reversal structure which taps into that high. The second touch breaks above the first touch. The third touch breaks above both of them and taps into the start of the structure. Notice that this little correction was above, it was separate. So that's an independent piece of structure. We then move to the downside. Okay, we have a similar thing here. We have a high, we near miss to that high. Okay, and then we tap into that area. We move to we have the middle section there within it. We tap above, we move to the downside. We then becomes one piece of its own. We have the high here. In this instance, we do move to it, but notice there we wick to it. If I just put this on the chart, I think this is EuroCAD's a brilliant example of how we trade. I don't know what's happened there. So we kind of tap into the area, but we wick to it. Okay. Then we come back up, and then we have this kind of structure. We have that kind of structure. We have the middle section again. Okay, we break above, wick above, tap out all the orders, and then move to the downside. So I'm satisfied that that is a completed piece of structure. So if that's a completed piece of structure, then what is this? This is likely a separate piece of structure as well. Okay, so if I just drill down, what I like about this, as I said, is that we're trading through the low. Okay, we're not on the low. And what I like about this is you can see the same psychology again. Okay, so we have this. We do have a kind of piece of structure here, and that is partly why I'm not going to be looking to call the tops here, because we have this piece of structure. Okay, we come down, we tap into the start of that structure. Okay, so if I was to look to get short with a risk entry up here, it's potentially a bit more risky, because once we've had a 1, 2, 3 touch structure and we've hit the 90% rule, this could be something a bit more complex where this becomes independent. Okay, so if we didn't have this here, I'd be more inclined to take a risk entry from here. But because when we see these 1, 2, 3 touch structures, and there was one when I was doing this that I saw, I'm trying to think where it was. Where was it? I can't find it, but there was one when I was doing this. There was an example of a 3 touch structure like that, where it then went into a separate piece of structure. And then if you'd have taken the risk entry, and I see a few of them actually, if you'd have taken the risk entry, it then formed something more complex, and you would have been tagged out Okay, and price formed something like that where it tapped into like the next area of liquidity, but I can't remember where that was. I wanted to show you that, but regardless, if we just take that off of the chart, what are we looking for? Because we have the same psychology again. We do have a high here, which this high near missed too. Okay, and if we just look at this on the 15-minute chart, look how it's when you see these sharp pullbacks. As I've said before, when we near miss to an area and then we see these really sharp pullbacks that pull back more than 50% of the move, that's likely orders, okay, being placed in this area and orders that are still there, dragging price back up. So with that in mind, what I'll be looking for is I'll be looking for the following. I'll be looking for price to, as I often do, I'll be looking for price to tap into the area of value, push down, so a solid push down on the 1 hour chart, followed by a correction on the 15-minute charts, a minimum of 6 to 8 corrective 15-minute candles, and then I would filter that on the 5-minute chart. And if that 15-minute correction was structured, I'd look to get short with the risk entry within the flag. If it's not, or I missed the entry, then I'm looking for that reduced risk entry on the break, and then I'll be able to manage it down to these lows for something in the region of 5.5 to 6%. What I also like about this, just to touch on it, is we're kind of retesting the back end of that as well. Okay, so we're retesting that low there, and a little bit of that. That's not really significant, but particularly this one, retesting the back end of that. So that is Euro CAD, and that's what I'm going to be looking for from that pair. And of course, if the higher time frame target kicks in, and what I would do in this instance is I would manage it. I would use the mechanical management system, and I would measure it from there to there. Okay, and set a take profit there whilst trailing my stops at the same time. And one of the reasons we may only get 90% of the way there and then pull back is because of that near miss up there. As I said, if we were to get that move down, we may not get all the way there, because then we may pull back to get that, okay, which would give us that 1, 2, 3, and then we would have that parallel structure like that. Then we move to the downside. Okay, so that would make sense why we may pull back from about 90% of that move, because then we would have that parallel structure, and then that would be the middle section. But we shall see. That is EuroCAD, and that is my forecast on that pair. So moving on and speeding up, I'm just going to leave that forecast on the chart actually. Right, there we go. And West Texas Oil. So West Texas Oil, let's analyze this narrative. So what do we have here? We tap below there. Okay, we push to the upside. What do we have here? We have a first touch, second touch that breaks above the first touch but fails to tap into this sharp move. Then we scoop all the way back round, tap into that area, wash out all the orders, and then move to the downside. In this instance, we come back up to fill this wick. I believe, as I've said before, that I see it now. We have this bullish wick. So when we have a bullish candle, usually they're more bullish than this, but when we have a bullish candle with a big green wick above, often, not so much if we wicked through the area, but certainly if we wick to, these wicks often get filled, or 70 to 80% of them get filled, and then we move to the downside. That's what happened in this instance. Okay, and then we have this kind of M style pattern. Okay, so where price moves down, the correction gets very wide, okay, relative to the impulse down which preceded it, and often these become more neutral, and then we push to the upside, tap into here, and we have that M style pattern like that. We tap into there and move to the downside. Okay, so we've washed out all of that liquidity. As I drill down, you can see here that we have, this might be more beneficial on the 4-hour chart. So this is a little bit more, we kind of have a bit of a wick there, okay? But if you can kind of separate this, you can kind of separate that as one piece of its own, okay? And that being the tap above that just washed out all the liquidity. We then moved down, left a bit of a footprint. We near missed to it again. Price moves down correctively because people are trying to sell this whilst the orders are still there, and orders being placed there, dragging price, being placed up there, dragging price up. we move to the downside. So that's a completed piece of structure potentially. Okay, then the price does the same thing again. We leave a footprint, we come up, we near miss to that area, then we tap into it and move to the downside. Okay, so I'm just seeing this as a potential, because we're clearly in a run of momentum now. I'm just seeing this as a move potentially down to take out this low and potentially that low as well. Again, just as with Euro CAD, we may near miss to these areas, come back up, and then tap into there to give us more of that 1, 2, 3, because we near missed to these highs and then potentially move to the downside. Okay, that's a possibility, but there's still, we're clearly in a run of momentum to the downside, and there's still profit potential to be made along the way. Okay, so if we just analyze this you can see the correct. I'm not a fan of this sequence alone. When we go like this, when we don't move down by way of tight flags like that and into the slightly larger ones, when we start off with something like that, that in itself gives me a clue that we are potentially moving up eventually to take out these highs, which we near missed too. Okay, because that's not so typical. But what I'll be looking for, if you just analyze this on the 15-minute chart, you can see that we have a sharp move up followed by a sharp move down. You can see this a bit more clearly on the 5-minute. That gives me a clue that that's where all the orders are. Okay, and I did this forecast on Saturday morning, but you can see already the psychology starting to show its hand once again, because the fact that that's a sharp move up followed by a sharp move down, the fact that it formed below this correction here, giving me a clue that would be a separate piece of structure, and given that this retested the back end of that, which also had a 1, 2, 3 in it, giving me a clue that that's a completed piece of structure. That already gave me a clue that we would likely near miss to this area. Okay, which we have. What's happening? We're moving down correctively, which means that we'll likely push back up to tap into the sharp hook point that we near missed to. Okay, which would just so happen to be a retest of the back end of that. So I was already anticipating this when I did my forecast on Saturday morning, and the forecast that I did on Saturday morning is as follows. Okay, so if we get this 3-touch structure where this sharp hook point here acts as the first touch of the piece of structure, then I would look to get short. Of course, we're already on the 15-minute chart, but I would look to, this is a 1-hour structure. It would be a 1-hour structure by that point, and I would look to filter that on the 15-minute chart and get short with the risk entry from the edge. Ideally, I'd prefer a little flag within the structure because of this sequence and those near misses up there. But because this 1-hour structure would be so small, it would be unlikely that I would get that. So I'd be happy to take this will kind of be a tight flag within itself. So it's not always possible to get a tight flag within a tight flag if the tight flag is quite small, if that makes sense. But my preferred option would be this 1, 2, 3 larger structure like that. Higher up in the run, I do prefer these where you get a 1, 2, 3 touch structure which lead up to the hook point. Okay, but further down in the run, as you can see, we're further down in the move now. I do prefer these, because these typically are more likely what we see, are more typical of what plays out further into a move. So that's why I've color coded this green and this one orange. I've set an alert just below the sharp hook point that we keep near missing to see if we do push back up to there. And if neither of these entries shape up, then I will not be looking to place a trade. I hope you've enjoyed this video, folks. That is pretty much the thought process from start to finish. There's other things that go on when I'm doing these forecasts, which I can't squeeze into a 20-minute video, but hopefully this thought process, as much as I've been able to provide in this video, has provided you with some value, and I look forward to bringing you many more of these videos. Have a great day, one and all, and I will see you again in the next video. Thanks for watching.